Hello traders, hope you guys doing well. I'm recording this midweek market focus. Today is the 11th of February 2015. Um, I've got a few bullet points that I'd like to cover with you. Basically, it's about market analysis. Um, Other things you need to know is how to step back and analyze the market. And then you might ask yourself, well, um, where are we? Or are you at the top or are you at the bottom of the whole range or the channel? Um, and the question is, well, how do we know? Well, what you have to do is to draw your lines. You need to draw your support and resistance, channels, which are the trend lines as well, and also you need to go to a different time frame and find a correlation, find a time frame agreement, a time frame correlation. Let's say you're doing end of day trading. It's always good to see what's happening on the bigger picture. It's good to see what's happening on the weekly chart and monthly chart as well. Um, Best thing to understand this is basically to literally do it with an example in front of us. Okay, time frame correlation can also be used for intraday too. So you can look for an agreement between the mostly between the hourly chart and the 5-minute chart. Um, so you're taking the trade on the 5-minute chart, and then you need to find an agreement between the hourly and the 5 minutes. Also, you look at the hourly and daily to see the bigger picture, what's happening, what is it telling you. So, for example, these are the Japanese yen, which is giving loads and loads of snipers there. Okay, for those of you who are trading snipers still, this is just literally telling you to buy as it hits the red line. So these are just beautiful buying opportunities. It works really well during the London session and the beginning of the US session. So in other words, between let's say 7 in the morning to like 4 in the afternoon, that's when you do your snipers, which is when the market is trading the most. So this is USD Japanese yen sniper. Let me show you another example for snipers. This is the well, if you go into the Aussie versus dollar, excuse me, it's having a moment. If you go to the Aussie versus US dollar 5-minute chart, in the meantime, and you can look at the whole pattern, draw some lines, trying to understand it, the behavior of it. I'm looking at the chart on today's data. So now it's 5 o'clock on the 11th of February. Okay, so during the day on the 11th, so Wednesday the 11th. Okay, if it's going flat like that, it's not gonna work, and it only works when it's trending in one direction nicely. So these are all selling opportunities. Sell. I wouldn't sell this one here because the market up to here was going flat. So the market up to this section here was going flattish. Okay. Now from here onwards, the market is pushing down, giving lower highs and lower lows, and these are your selling opportunities. Sell, sell, sell. This one didn't quite hit the 50 MA, so you're not gonna sell there. Okay. Now you can even analyze this chart. So that will be your channel pushing down quite nicely, and the other channel here like that. So that's your downward trend on the 5 minutes. Now if you go to the Kiwi versus dollar, here gave a nice selling opportunity with an entry just where the 50 MA is, stop loss 20 pips, target 20 pips, so it's always on a 20 pips basis, up and down, 1% of your account. And this one is running live still. So I'm gonna leave this one running. just an example. This one was giving a nice level of support, and it's becoming now resistance. Now I've got the auto scroll ticked, that's why it's scrolling back by itself. So now it won't do it because now it's unticked, the auto scroll. This is the level of support here at the bottom. Here is breaking through, and now it's becoming resistance, which is matching up with the 50 EMA as well. And the market is giving lower highs and lower lows. So it is pushing down into a downtrend. Okay. So if you keep on, when you're trading snipers, if you keep on taking these patterns, and you're increasing your odds, okay, and this one doesn't mean it's gonna be a winning trade, okay, because if you knew 100% guarantee it was gonna be a winning trade, you might as well put your house on it and put a £1,000 per point. But obviously it is not the case. What you can do is you can play with your probabilities and you can put the odds in your favor. That's all you can do. So it's about probabilities. It's about putting the odds in your favor by going through a checklist, um, a very basic checklist you need to follow. Okay, so it'll be lower highs, lower lows, pushing down on a downtrend. This is the level of support becoming resistant. That's already 3 or 4 points that you're going through. Okay, so obviously you can get any checklist can get very very complex, but you need to at the beginning you need to have the foundation clear. So just 2 or 3 points, 2 or 3 checks that you need to follow. It's like a pilot when he jumps on a plane, does all the checks, right? He probably does like 100 checks, but I mean, um, for trading, just the foundation is just a 2 or 3 checks points. Okay, just simple. And then as you understand the market, understand the behavior of the market, you can add a few more checkpoints on your criteria, on your checklist. And that's it, really. That's what you have to do. So let's move on. This one was the Kiwi versus dollar. We spent quite a while on snipers. I'm gonna move on to something else. And so let's see what's happening. Okay, let me show you something interesting now on daily charts. This is USD Japanese yen. I'm gonna go on to the daily chart. Just bear with me. There we go. It's up already. Right. So what you can see here is a beautiful triangle. It's called a symmetrical triangle, which is done on the daily chart. So this is the triangle, like that. And usually symmetrical triangles, they carry on in the direction of the trend. Now here it has been broken already. A good triangle is when it gets nicely squeezed within the little corner here. So it gets kind of squeezed in nicely here. And then you're looking for a pop-up. You're looking for the bubble to burst, basically, and um, that's when the entry gets filled into the market. So you will have your entry up here, your stop loss down here, and you can do it with no target, and just move the stop loss as it goes up. Okay, from beneath. I mean, the stop loss management is a different topic. I'm just telling you about the execution and how to identify these patterns. Now, the Japanese yen has given 4 triangles on the past during the past 4 years. This is the most recent one, which was a few days ago, and it's now kicking off nicely to the upside. So, which means the dollar is going up and the Japanese yen is going down. Right. If you go back, I'm gonna show you quite a few more triangles. Just bear with me because I'm still getting my head around it on smart charts. There we go. Right, there's a second triangle. So it's a beautiful symmetrical triangle. And it's getting nicely squeezed in the little corner here. And then from there, it just kicks off to the upside. And the thing about the Japanese yen, when it kicks off, it just goes in one direction and it doesn't look back. Okay, so this is the second triangle. Let's carry on going back. Boom. And boom. Beautiful triangle again. And that's what happens. That's the breakout. That's the breakout of the triangle. Okay, so it's getting a nice consolidation here and it just goes. You also see the triangle, beautiful triangle, will have the EMA very wavy. And it's going to be a very wavy EMA. It goes up and down, up and down, up and down, because basically triangles represent indecision in the market. Okay, so this symmetrical triangle represents indecision until it breaks through the high or the low. Hence the movement on the 50 exponential moving average. It's just flat, basically. Okay, let's carry on back. So far we got 3, 1, 2, and 3. And I'm gonna show you one more. This one, oh, like that, and like that. Boom. Excuse me, this one will shift a little bit. There we go. So that's where it goes, the last triangle. Okay, so that's the first triangle. It happens to be that during this move, during this rally, the Bank of Japan was printing money as well. It was doing a QE program, so we're printing money, trying to devaluate the currency to increase exports. But this is about these more fundamentals, which we're not really into fundamentals here. What we're looking at is the technical pattern. Okay, so one triangle here, another one there, another one there, and another one now. Okay, now because of the push on the daily chart to the upside, you'll see a lot of snipers on the 5-minute chart. So when the daily chart is flying like that, that's when you're gonna have a lot of buying opportunities on smaller time frames. And what you have to look for is for the high highs and high lows, and it's just literally the same thing over and over again. You're looking for price action, so you're looking for high test bars and low test bars. You're looking for your moving averages. You're looking for all the lines, the support and resistance. So basically, you need to spend some time on it, drawing some lines, understanding the market, see where at the top or where at the bottom. Okay, you can always go into the monthly chart and see what's happening on the bigger picture. Okay, so ignore this bunch of lines here. Let's just look at the actual pattern itself. So this will be a, excuse me, this will be a now. I cannot go back much, but it's got a lot of room to go. In fact, back in the 70s and 80s was miles away up here. It was far away, like really, really far away up there. And it's been dropping and dropping and dropping. And I believe this was a historical low. Okay, and now it's been catching up over the past 3 or 4 years. Okay. So yeah, so this is just the Japanese yen, which looks pretty impressive. Now, if you go on to something else, so yeah, I'm buying it myself. The Japanese yen is looking quite good. The actual triangle itself. What you can do as well is to wait for a retest of the level here. So it has already been broken. So you can wait for a retest, like breakthrough, pulls back down and finds it as a level of support, and then from there. Okay. So yeah, now we have crude oil, which had a nice push to the downside. As I always say, the lower it goes, the better it is. It's gone down quite a lot. Let's have a look and delete. No. Okay, well. Okay, never mind. I just want to delete a few lines as it's a bit messy. Anyway, crude oil monthly chart. Okay, so that's where we are now. After a huge drop, we go into on the daily chart, and this could be the bottom of the drop. And they had a huge sell bar today. Now it's pulling back up again. So let's see what's there's some sign of weakness happening here. So we have to see whether the next swing low is gonna take the previous swing low or not, and it's gonna give a new low, fresh low, or whether it's gonna be another double bottom, like in here, for example, we gave a double bottom formation. It might give a triple bottom, so there'll be an indication of a potential turning point in the market to the upside, and then you must start seeing some high highs and high lows for a while. So this is crude oil. So now if you look onto, like, let's say Australian dollar versus US dollar, this one is a beautiful to sell. It was flashing up as income waves and profit boosters. That was a nice high test bar up here. So let's get into that. Let's see. Oh, okay. Okay, bear with me. I have to swap it here. Profiles, Lem Forex. I'm gonna go into the Lem Forex page where you can find the income wave, profit booster, and the other two strategies, money market breakout, and so on, and the interbank radar. And you'll see that it was flashing for a selling opportunity as the market was giving low highs and lows, was trending nicely to the downside. So it was, see if I can find it. Okay, that will do. But it was on the daily chart, so bear with me. Daily. Right, so on the income wave daily chart, that's what it was. Based on the high test bar, you gave an entry just below the low of the high test bar, and a stop loss just above the bar here. And the target was based on a 1-to-1 reward risk ratio, the one that came as default here. But you can always increase your target here. You can do 1-to-1, 2-to-1, and a 3-to-1 reward risk ratio. That's what is being back tested. So let's say you're gonna go for a nice 2-to-1 or even 3-to-1. You'll see that these dots, which are the targets, will be changing. Just look at it carefully. I'm increasing my target. I'm increasing my reward up to 3% gain. So by risking 1%, I'll be looking to make 3% out of it. So as it is now, it's a 3-to-1 reward risk ratio. The target is quite far down. It means it's less likely to hit the target, but if it does hit the target, you'll make 3%. If you put it down to 2%, you see that the distance is reducing. It's a bit smaller now, so it is a bit more likely to hit the target, but it's less money. Okay, so obviously it's less number of pips. I mean, everything has pros and cons. Just by the look of things, what I suggest to do is to analyze it and put some lines on it and see where we are in the whole picture. So I'm gonna pick some lines. Okay, I probably need a bit more data, just bear with me. There we go. Okay, that's a bit too small now. And one more, and okay, right. Okay, so that's fine. And now this one will go down like that. There we go. Okay, so at 2 to 1 will kind of make sense because when you put your lines up and this is your train line resistance and this is your train line support, if the phase one kicks off nicely to the downside by the green dot, somewhere here by the green dot, it'll be a 2 to 1 reward risk ratio, which is pretty realistic, I would say. So now let's zoom in again. Now it's kicking off nicely to the downside. It has already made close to 1%. Now it's going for the second. Obviously, if you has taken it like that, you have taken it based on a 2 to 1 reward risk, it's halfway through now. So it needs to go for the second half of the trade. Okay, and this is for an income wave, which it also flashed up as a profit booster as well, because this section here, this is a ring high too. Okay, it's a ring high and a high test. So it was flashing on the profit booster and the income wave. Okay, so basically this is what you have to do. Make sure you understand the whole picture, put the lines up, go to the weekly, monthly, daily chart, and then obviously once you know what's happening and you've got a few options to trade, then pick the best one. You've got to focus on quality over quantity, so you have to be selective with your trading. Okay, so just do cherry pick and pick the best ones out there, and don't just trade everything that comes, everything that is flashing, and we just be more selective. But at the beginning, to build it up, you have to take loads and loads and loads of trades. Then after a month or two, once you've been trading for a while and you're starting to understand the market and to feel the market, see how all the currency pairs they all move differently and so on, then you're gonna be scaling down, and you're gonna be looking for more quality out there. And that will increase your success rate. That will increase your odds. Okay, and that's the way forward. All right. Okay, cool. I'm gonna leave it there for today. Hope you guys enjoyed it. As you know, you can always rate the video. You can also download it. You can put comments up as well. And I will be, for those of you who don't know, we're doing 3 a week. So we're doing Monday, Wednesday, and on Fridays too. Okay. All right. Hope you guys enjoyed it, and I'll catch you all soon. Cheers there, and bye now.